Hey guys, and welcome to today's video. So in today's video, I'm going to be going over the essentials of identifying the daily bias in the marketplace. So one challenge that have been for traders, whether beginning traders or traders on the journey to consistency or even professional traders, is the ability to tell what the market is going to do on a daily basis, on a weekly basis, and on a monthly basis, whether the market is going to be buying or is going to be selling. You understand? And that's been major challenge. And I believe most of you watching this video right now, one of the reasons why you click this video is because you want to be able to understand the daily bias for every given day. You know what I'm trying to say? And that is why you actually click this video in the first place, because you want to be able to tell what the market is going to do. And if it is possible for us to be able to use a magic wand or by fortune telling to be able to tell what the market is going to do, I'm sure a lot of us are going to go for that, because we believe when we're able to find that daily bias is going to reduce the stress on our trading, and we can actually trade with ease and confidence in the marketplace. But the truth is that actually you don't need a magic wand or a fortune teller to be able to tell you what the market is going to do. All you just need to rely on is understanding the smart money concept. And when you understand the smart money concept, it's actually the magic wand, that fortune telling that you ever need to be able to predict the daily bias, the weekly bias, or even the monthly bias. You understand what the market is going to be doing, whether it's going to be a buying week or a selling week, whether the day is going to be a buying day or a selling day. All you need to do is understand the smart money concepts. And we're able to understand them and be able to apply them levels by levels, layers by layers, precept by precepts. You'll be able to understand what the daily bias is going to be for a given day. But I want to also put something in mind that day trading is not actually everyday trading. Day trading is actually being able to catch that highest probable um, trading expansion in a given day. Your ability to be able to capture that whole expansion in a particular given day. So it can be one particular day in a whole week. You can say that can be that your opportunity for your day trading. You understand? And your ability to be able to repeat this week in, week out. You can say day in, day out throughout multiple weeks will be able to generate a lot of steady returns for you over the years, over the weeks, over the months. You know what I'm trying to say? So day trading is not actually everyday trading. It's your ability to be able to identify your highest probable day and be able to capitalize on it to be able to maximize all the actions on that particular day. So that's actually what day trading is. So I believe that out of the way. Let's go straight into what we have in today's video. So you can see the lipstick on the chart, the shaded areas on the chart. Right here, this is Thursday's trading given this week. So at the time of this recording, this is 15th of October 2022. So this is Thursday's trading, and you can see the whole expansion on this particular day. You understand? So if you're able to catch a trade like this every given day, you want to say in every given week, you want to say you are going to be able to compound your income. You want to say over time. You want to say you're going to increase your capital over time. So you want to be able to look at this particular move over here. You want to say, and this particular kind of move happens every week. You know what I'm saying? So these are the kind of setups you want to look out for, and that's the reason why I'm actually making this video, to be able to remove that veil. You want to say in your eyes, to be able to understand daily bias and be able to catch moves like this in every given week. You understand? So without further ado, let's just get right into the video. So I'm going to be removing the lipstick of the chart and I'm going to be going over the ideas on how I arrived at this particular trade in this particular given week. So let me just remove the lipstick on the chart. So with all that cleared out of the way, I'm going to be going back to the daily chart. So this is where all the magic begins on the daily chart. So the first thing that will help you to be able to identify your daily bias correctly is, number one, you want to be able to understand context. You want to be able to frame your context that you're trading within. Your ability to be able to frame the context that you're trading within is going to increase your probability or chances of identifying daily bias up to 70%. Where most traders miss it is the ability to be able to frame their context correctly. You know what I'm saying? So the ability to be able to frame your context correctly is going to reduce or boost your so it's going to reduce the inability of identifying the daily bias and going to also increase your chances and probability of identifying the daily bias. So what do I talk about context? And when I talk about context, actually, I'm actually referring to where are you in price? Are you at a premium or discount level? You understand? You are talking about premium and discount. You understand? Because premium and discount actually tells us whether we should be a buyer or being a seller. You don't want to be buying at a premium. Is that also? And you don't want to be selling at a discount. So you want to know when the the price rather is already discounted, and you want to know when the price is already at a premium, so that you can know how to better position yourself in price. So that's the first thing you want to be looking out for as a trader, and that's what we're going to be framing right now. So if you look at these highs over here, this will be my high, and this low right here will be my low. You understand? We are talking in regards of let me bring the previous separator. We're talking in regards of this particular week. So before this week started, this is what you should have done. You want to identify your high and this low. That's before this whole week started. So this is your high and this is your low right here. So some of you may say, why didn't I pick this low? You understand? Because this low is actually obvious. And you can see the way the bodies align. You understand? Like a swing low and this swing high. So you want to identify this high and this particular low right here. You get it? So now you have identified this high and this low. You want to be able to know the context to where the current price is right now. So you want to capture this high over here. And you want to capture this low right here. And you want to note the 50%. Mind you, this indicator right here is the Fibonacci for those of you wondering. And this is a 50% of the Fibonacci. So we'll remove the Fibonacci out. Now we are done using the Fibonacci. You can actually if you're using the MT4, you can actually use this trend line also in case you don't want to use the Fibonacci. You can see that dots at the middle. That's also 50%. So that's another tool you could use to identify equilibrium. So from this high to this low right here, this red line right here is the equilibrium. And now, with where current price is on the daily chart, we're talking with the benefit of hindsight, like this has not happened. So you want to see the way price is dropping right here. And now it's almost close to this particular equilibrium right here. So the next thing you want to understand is you want to understand where your institutional reference point. You understand that's the next thing on this particular from this particular swing high to this particular swing low on a premium level and on a discount level. So where current price is, we have seen that price took out this low, and just below it there is a fair value gap from this low to this particular low. So this is an imbalance in price, a fair value gap in price. You understand? So you want to identify that area. It's very, very, very sensitive. You understand? So if price drops into this discount level below this equilibrium, I want to see if price is going to respond to this, how price is going to respond rather to this particular inefficiency in price, this particular imbalance known as a fair value gap. So I want to see the way price is going to react to it. You understand? Is it going to feel it completely? Is it going to feel it halfway? Is it going to feel it just sweeping below the lows? Mind you, for those of you wondering why I'm saying this, you can watch all my fair value gap for entries video. I really talk about various variations on how to be able to identify the fair value gap correctly. So um you can watch that in the videos here on this channel. So we want to see how price is going to react to this particular fair value gap if it drops into this discount level. So the next thing we want to also identify, we want to also identify this old daily high. Why? Because it is actually popping higher above this particular um fair value gap high. So it could also be significant in what price is going to do. So I'm going to extend that out in price too. So mind you, this is just the benefit of hindsight that I'm using right here. But this was actually how I was looking at it during the week before this whole thing happened. So what you want to do is that you want to watch how price reacts. So the first thing you are doing, you are waiting on the daily charts. So you see to see what price is going to do within your context, how price is going to react within your context. So price starts sprinting from this particular day. Mind you, these Sundays trading, price went down. Price went up for a while and expanded downside. Now, price at this level has traded below this equilibrium. So, price at this level now has entered a discount level. But that doesn't mean we go in and start buying. We want to see if there is an institutional sponsorship. That's the third point. You want to look at if there's an institutional sponsorship, you want to say in the marketplace to support us in our buying ideas for now that we are in a discount level. You don't want to rush in and do anything. You want to wait. So, and when you wait, now you see the way the next day, which is, I believe this should be Wednesday, you see the way price reacted, responding. But that was after tapping into this old daily high right here and filling this imbalance, this fair value gap in price, at least quite efficiently. You understand? So you can say price tapped into this old daily high, sweeping below this low. Now we have a support and institutional sponsorship telling us that we can go in the next day to start looking for bullish prices. You get? So now before we go into the next day, we want to understand the institutional reference point because that's going to help us frame our institutional order flow to start supporting bullish prices. So if we look very well right here, this is an order block being formed. These particular bodies of the body of this candle engulfed the body of this candle. So this is an order block. So we want to identify this in price right here. So um we'll go back down to the hourly chart, and we'll, before this day starts, we want to see whether there's an institutional order flow supporting bullish ideas. So we've seen price has tapped into this level right here, this particular area right here in price, which is the old daily high, and also an in a fair value gap being filled correctly. So you want to see the way price reacts. So price came down into that place, and this was the short term high, a swing high it created, and all of a sudden there was an impulsive move clearing out these highs. So this tells us a break of structure has happened. And why is this break of structure very significant? Because the context we are within is a discount level context. And when you're at discount, you want to be buying. So not all break of structure stand. That's why you must be able to identify your break of structure correctly. And that's why I'm teaching you all this, the essentials to daily buyers. So why this break of structure is very significant in price is because this particular area is actually a discount level in the general theme of things from the daily time frame. You understand? And mind you, we've tapped into a old daily high. You know what I'm saying? And mind you, by the time we are coming back to analyze this, this whole day has closed. You know what I'm saying? So this is a whole daily action move. And we can see from the higher time frame that this is actually an order block. So the story is solid to support that this particular area is a break of structure. So you see this impulsive move higher, and there's a retracement downward. So we saw the way price reaction start expanding higher. You know what I'm trying to say? So we draw out this particular area in price, which is the order block line. This particular line in price is an order block. So we want to see the way price, whether price is going to react to this order block, or is going to come for these lows, or probably this particular order block. We want to see the way price is going to react to this particular order block. So that's why we outlined it in price. And you can see the way price came in on the next day, just quite on the London session. This is a London session. This is 7 o'clock chart time. I believe it's 8 o'clock London time right here. You can see the way price reacted to it right there. If I go down to the 15 minutes charts, which should be a good time frame for day trading, you want to see the way price. So you can see if I zoom that in properly, you see. Okay, let me zoom that again in. You see also when price came into this line, which is the open price of the order block from the daily chart, you can see the way price reacted down, creating a swing. This is a swing right here. This particular area right here is a swing. And so the price expanded higher with this move, clearing out this swing high over here. And now you can see a retracement. And at this particular candle, which is 8:30 chart time, which will be 9:30 London time, you have your buying opportunity. You understand for this given day. So you enter your buy here, framing your risks to reward. You buy your stops below this low because you don't see price violates this low, because this particular area now is an institutional market structure shift from this daily time frame order block. This particular line here is a daily time frame order block, and we have a lower institutional market structure shift from the hourly chart from this old daily high. So you see there's a whole story going on. We are not just jumping in to start buying from discount level. You see the way the process. You understand? Don't worry, I'm going to give a summary at the end of this. So teaching. So the next thing you want to do is you want to frame your risk to reward. So you look at your risk to reward. So if I drag here, this is um 350. So you buy here and say put in your risks low here, 350 pips below, 35 pips below, just 35 pips. You're risking 35 pips. You understand? So now, how do you frame your risk to reward? The truth is that now you've entered a discount level right here. You get this particular old high, you understand, becomes a high, you understand, that is relative to this new low being created right here. So you want to frame from this high, sorry, from this particular low to this particular high that you came down from. You want to frame um your equilibrium, your premium and discount level rather, and that's your premium, your level is going to be here, right here. So this is your equilibrium, and this is your premium level, and this is your discount. So you are buying from this discount on this bigger time frame premium level into the deeper premium. You understand? On the premium level of the daily time frame. I hope that's not confusing. You understand? I believe you watched this video a couple of times. You understand what I'm talking about. Let me zoom out so just give you a little explanation. From this high to this low, this particular red line is the equilibrium. From this low to this high, this particular red line is actually its own equilibrium. So in this premium level, we are framing our discount and premium level within this premium level from the daily time frame. So we are framing that on the hourly chart. You get why? Because now we are telling a story. You understand to where we are. We want to catch a daily bias. You understand? So that's why we're actually telling the story to be able to catch that precise move. So now what you want to do is that you want to be capturing your move. You want to be exiting this particular trade at a premium level. You understand? Because at that level, that's where sellers are gonna be. You understand? So you want to identify your highs. Why? Because now you're trading from a discount level. So you want to see price take out highs. You understand? So you identify this high, and this high. So I'll identify this high right here. I want to see this high right here. You want to see this high right here. So you buy here, you are watching price. All you do, what you want to do at this level is, as price keeps pushing up, what you want to do, you want to be adjusting your stops. You want to see to be trailing your stops rather to each high is being taken. So when price takes out this high, you want to trail your stops. You want to say to a level. You want to say that you know that price will not come down and break, and you can do that on much more lower time frames. I believe like the 15 minutes right here. So when price takes out this particular high, and also I believe this particular high too, what you want to do, that's with this impulsive move here, you want to throw your stops to this low right here. So why? Because the day is not yet completed. So you want to throw your stops to this level. You don't want to exit. You want to say at this level you are at break even right here. So price takes out that those two highs. So you want to see if price is going to take out that high. Why? Because this whole move is just all the way into the New York session. You want to say a New York session is not the end of the day. You know what I'm saying? So you can decide to take out partials here, or you can decide to throw your stop loss to this low right here. So we saw a retracement, not taking out this low. Why? Because institutional order flow, institutional sponsorship is in our favor. And let's the price bought again, clearing out this high right here, and ultimately targeting these old highs right here. So let me see. Let me outline that level in price. So if I zoom in, so you see it almost got to that particular high right there, but it fell short of just few pips before getting to that high. But at this point, you want to get out. So why? Because when you see price fail like this, the likelihood is to not get there, especially in this particular time zone. You have to say this is time on price, time of day, um, influence. You understand? This is already 4 o'clock chart time. You understand? And at 4 o'clock chart time, the banks are already closing. So if price fails to get to that particular high, that means there probably is going to be a reversal, like you are saying, with benefit of hindsight, or probably price is going to retrace again. And at this point, if you've entered here and you're at this point, you shouldn't be greedy. You should want to take out your positions. So this is how you'll be able to frame your daily bias. You know what I'm trying to say? So from all the way from the daily chart. You know what I'm trying to say? So what are the things I've said so far you get to be able to identify daily bias? So that was how I was able to identify the daily bias you saw on the first screen I uploaded, which is this particular lipstick right here. This particular whole story around line here. This is that particular order block line right here. Price dropped into it, expanded. I was targeting these highs right here, but price failed to get to that particular high on the Thursday's trading. So, but I was done and I was out of it. So that is the way you're going to be able to frame daily bias and be able to know what the price market is going to do on a every given day. So number one thing you want to understand, you want to mark out when identify your daily biases. Number one, you want to identify the context you're trading with. Are you in a premium or discount level all the way from the daily time frame? You want to identify that. Are you able to tell that story by using marking out your swing high or your swing lows, the obvious ones. The second thing you want to note out when talking about identifying the bias is you want to know your institutional reference points all the way from that daily high, your institutional reference points on the premium level and at the discount level on the daily chart. The third thing is that you want to wait on the daily chart to see how price reacts when it gets within any given context. You understand? So based on this particular story we shared here, you discussed right here on this particular video, we saw the way price reacted to the discount level when it on the daily time frame. So you want to wait on the daily time frame and see the way it reacts at an institutional reference point on the discount level. Because now we're trying to see if we can get buying opportunities. And once price reacts, you want to know if that reaction in price there's an institutional sponsorship. How are you going to know if there's an institutional sponsorship? You're going to see an institutional market structure shift, like I shared earlier. You understand? So I've done a lot of videos on those stuffs, and you can watch them on this channel. I can leave a link around this video if I remember to do that. So then you want to the third thing you want to look out for is you want to see if there's a institutional market structure shift when price has tapped into an institutional reference point on the daily chart. You understand? And that's what we saw when price tapped into the old daily high, which is also within the fair value gap context on the discount level of the daily swing. And what we did is we saw the way price reacted. You understand? And gave us an institutional market structure shift. This is what I'm talking about. This particular area right here. These are institutional market structure shifts. This swing down here, price went up, taking out this high, reacts downward and expand to the upside. So that's what we are looking for, is social market structure shift supporting our idea. So then the fourth thing you want to pay attention to is to see if there's a it's not sponsorship, like I've said earlier, sorry. You want to see if there's a sponsorship, like when price reacts to that particular area. You want to see like social market sponsorship, like in terms of an order block, you want to say a fair value gap or the rest. And in these times, we sell an order block formed on the daily chart, and we capitalized on that particular order block, using it as a support level, because we have seen that we saw that order block was coming all the way from a discount level. So that was very, very significant order block. You know what I'm saying? And we see the way we capitalized on that particular move right here in this area going into the next day trading, and you see how we're able to catch the expansion. So that's how you're able to do it, just using these four simple steps. You have to say, first of all, context, talking about your premium discount level. Second of all, is identifying your institutional reference point on the daily chart swings. The third thing, you want to wait for institutional sponsorship. You have to say, as price taps into these institutional reference points from the daily chart and within your context, taps into your area of interest, like your context you're talking about. And then the third thing finally is the fourth thing finally is you want to see institutional market structure shift, and you want to capitalize on the new institutional reference points being created, why price tapped into the context that you're within or you want to trade within. So I hope you find value in today's video. If you do, you can give us a like and hit the subscribe button or share these videos, and God bless you.